let's proceed to the next phase. So now let's come to futures. Welcome to futures class. All right, so futures and margins are almost the same thing. Margin trading, futures, they're almost the same thing. In the sense that in futures and margin, the same rules almost apply. All you have to do is to predict correctly which way the market is going. Now, take for example now, even at this point that Bitcoin at 15.6, I'm still expecting some sort of dip to 13K for Bitcoin. So now, if I'm expecting that kind of dip for Bitcoin, I might decide to short Bitcoin. Now, let me explain some terminologies in futures / margin. There's what we call long, there's what we call short, there's what we call liquidation, there's what we call leverage. What is short, long? When you're longing a coin means you're buying the coin. It means you're predicting that the coin will go up, and the price of the coin will go up. When you're shorting a coin, it means you're predicting that the price of that coin will go down. Now remember, in spot trading, all you are doing is you are maximizing your profit by buying low and selling high. So for a spot trader, a coin that is really doing well is not a good time to buy. They have to wait for the coin to retrace, have a pullback, or be bearish in a bearish market, find a very good coin that have really dumped and buy, or a coin that's really oversold. A coin that's really oversold and buy, so they can make profit when the coin, when the price of that coin is really low. But in futures or margin, you are buying the coin either ways. Whether the coin is doing well, whether the coin is doing bad, it doesn't matter. What matters is that you predict correctly. Is Bitcoin going to dip? Okay. At what point will it dip to? Then you take advantage of that. You either open long or you open a short trade. Like I said, long is buy, short is sell. When you're longing, you're buying. You're shorting, you're selling. You're saying, when you're long, you're saying, hey, I expect that Bitcoin will hit 17,000. So you long. Like right now, Bitcoin is at 15.6. If you're expecting that the Bitcoin will hit 16,000, you can long it and you make profit between 15,688 and 16,000. Same thing with Ethereum. Now on Binance, one of the most popular leverage trading or margin trading exchanges is Bybit and BitMEX. Like, I think I have a book on BitMEX. Where I explained some of most of the technologies, because that was actually BitMEX was my foundation for margin and leverage trading. And then the same rules applies. So another terminology you should pay attention to in trading futures or margin is liquidation points. It's not like I was trying to explain in the sports trading class, where but I said, in spot trading, your loss can be impermanent in the sense that you buy a coin and instead of the coin start doing well, the coin start dipping on you. You are on loss, but then your loss is not permanent until you close that trade, until you sell off at loss, which means as long as you're still holding that coin and the fundamentals on that coin is solid, you are hopeful that the coin will still come back to your buying point and then give you profit from your buying points upwards. But in margin and futures, it's not the same. Margin and futures have what we call liquidation points, in the sense that if you buy a coin, if you open a trade, now let's say for example now, you decide to long this coin to 16K. and now you use market order. This is your leverage, 25x. Of course, in leverage, I'll explain leverage very soon. You just said you want to use 10x. You want to use 10x, and then you want to use market order. You're saying you want to use whatever the available funds you have to trade. What am I trying to explain now? Okay, liquidation. Now, when you enter that trade, you will see, as you enter a trade, you will see your liquidation price. What is liquidation? Liquidation is that price you get to and you lose all your trading equity. Let's say, for example, now you're using $50 to enter a trade, for example. You're using $50 to enter a trade, for example. If you enter that trade with that $50, you will see your entry price and you'll see your liquidation price. The liquidation price is saying this is the price that if you are longing, if you open the long trade and instead of that trade to go up, I start going down. If that price goes down and touches that liquidation price, you will lose that $50, completely non-refundable. That is the risk involved in trading futures and margin, because you are taking more risk. Now, even if you don't use stop loss in spot trading, in futures and margin trading, you must use stop loss, because stop loss minimizes your loss. If you're going to lose $50, if you're putting $50, if you're going to have any losses, you might end up having a loss of $25 and you still have $25 remaining. So half bread is better than none at all. So if let's say, for example, now your predictions didn't work out, like what happened to me sometime when I longed a trade and then it didn't go that way. The trade went against me, and my stop loss helped me to minimize the loss. Then there was a period too that I even totally forgot to even put a stop loss, and it hit my liquidation point and I was liquidated. So I'm telling you that this trade is risky. Using margin and futures is risky, but then it has its advantages. That is where the leverage comes in. Your profit margin is dependent on your leverage. Higher leverage, higher risk, higher profit. So that is why, even if you don't obey the rule of compounding your profit in sports, you must obey that rule in futures. You must obey that rule in trading margin, in the sense that be comfortable, be okay with 5x, be okay with 10x, but please do not go beyond that. Even on OKEx, the highest leverage OKEx, if you pass 20x, 25x on OKEx, they will warn you that you should manage your risk wisely. Just see what they're going to say now. Let me increase this margin now. I'm increasing it now. I've increased it more than 20x. They're already telling me that it is comparatively high. I should please manage my risk properly, because you can get up to 125x. Imagine using $10 to enter a trade and you're using 125x leverage. That is lots of profits if the market goes in your favor. But then equal loss, equal profit. The same way you're going to lose, so you're going to make profits so crazily if you're using 125x, the same way you're going to have losses so crazily if you're using 125x. So that is why, if you're trading futures or margin, it's very important that you use low leverage. Between 1x and 10x is very, very safe for you. So it's better for you to make $10, $20, $50 than to aim for $200, $1,000 at a go. I know that you can easily make $1,000 with leverage trading in one trade. If let's just say you long a trade or you short a trade with $100, you can easily make $1,000 if you just say if you're using 25x or 50x in a trade, you can easily make that amount. Yeah, but then remember, higher risk, higher reward, and higher loss. So I've explained what long is, short is. So when you're told to open short long, it means that you're expecting that the price of that coin will go up. If you're told to open a short, you're expecting the coin to go down. And then now there's a difference between one difference I've seen is between what do you call it? BitMEX and these futures in OKEx and Binance is what we call USDT margin and coin margin. Now, if you look at it, USDT margin and coin margin. Now, in coin margin, you are depositing the coin. You are using the coin. You are longing the coin. In USDT margin, you are, let's just say you're longing a trade. You're longing the coin against USDT. So there's usually more profit with the coin margin than the USDT. So if you're going to long Bitcoin, for example, you use Bitcoin. But if you're going to use, let's just say, if you want to really have, you want to use minimal loss, minimal profits, use USDT margin. So coin margin, you deposit BTC. Like in this case now, these are the coins you can trade on futures. BTC, LTC, ETC, SRP, EOS, BCH, BSV, TRV, Link, DOT. I'll do Binance tomorrow. But just know that the same rule also applies to Binance. USDT margin is same. But USDT margin now, you now deposit USDT. Now you're trading with USDT. When your profit comes back, it comes back to you as USDT. In coin margin, when your profit comes back, it comes back to the coin that you excuse me. Sorry for that breaking fast. Had to drink water. So, so, excuse me. So now, in this case now, you want to short BTC. You click open short, excuse me. And then you click you select coin margin. Select coin margin. Excuse me. Now, if you can see price difference between the coin margin and the USDT margin. To open short, you're expecting that this coin is going to dip using 10x. So you click 100%. You click 100%. If you click open short, if you click open short, it's open done. Now, if I click open short now, if you click open short now, you see immediately you can put your take profit and your stop loss. You click on take profit. You're saying that you have two options. Do you want to take profits at both either market or limits? So if you're using limits, it means that you're going to select your trigger price, your take profit trigger price, your take profit order price, and your stop loss trigger price and your stop loss order price. But I prefer to use markets in the sense that because to use markets on BitMEX, you see options like market price and all that. Now, in this scenario, I prefer to use markets in the sense that as soon as the price hits that point, as soon as the price hits that point, hits the price, your trade will automatically close. Either it's minimizing your loss or you're taking profits. Because if you're using limits, it means that your price has to actually hit. Like from the order book, you have to actually pick a price from the order book. So there can be a little bit of variation in the order book and the market price. So market price could be at a particular position, and in order book, there is no price like that at that point. So your order will not hit. So to stay safe, use market. So as soon as the market price hits that point, you say, so what you have to do is like, now I'm saying that, I want to short this trade at 15,600. Telling me I'm not going to make any profit of BTC. I'm going to make 0.001 BTC. That's about, excuse me, very sorry. So then I said, okay, my stop loss, since I'm shorting, another rule you should pay attention to is that in your stop loss, we are longing a trade. We are longing a trade. It means that your stop loss must be below the price. You're predicting the price will go up. It means that for you to minimize your loss, it means that the market has to go against you and start going down. So your stop loss must be lower than your price. It must be above your liquidation price and below your entry price. I hope that makes sense. Your stop loss must be above your liquidation, because there's no point in putting a stop loss if your stop loss is below your liquidation price. So your stop loss must be above your remember, you can cancel this, like you can adjust your take profit and stop loss whenever. Let us say you set your take stop loss and take profit and you were not okay with it, you realize that your loss might be high if it goes against you or something, you can cancel it and change it. So what was I explaining before? Now your stop loss will now be since my take profit is 15,600, which is my take profit is 5,600, which is not much because my profit will be 0.001 BTC, which is actually it's not even up to, which is $1, about $1 plus. Or let's just say now, if I'm making it 15,000, you see, my profit now makes sense a bit. I'll now be on about $20 profit. If I'm shorting it, I'm saying that the market is going to be, I'll be on $20 profit. I'm entering this trade with $50 and I'm making $20 profit by shorting the trade at 15,000. And then I'll now put my stop loss. My stop loss will now be above. So I'm shorting, my stop loss will now be above. I'll now put the current market price is at 15,600. I'll now put that this thing at 16,000. So this is my loss. I'll have a loss of about $8, $9. I have a chances of making $20 profit, and if the market does not goes against me, I'll have a loss of $7 from the money I'm using to trade. I'm using $50 to trade. So you can see it's very important that you use your stop loss. It's very important that you set your stop loss for your trade. If not, if it hits your liquidation price, so definitely, if I click OK now, you will see your estimated liquidation price. On BitMEX, you would see your estimated liquidation price before you even enter the trade. But I'm expecting the liquidation price for this trade should be probably around 14.8 or something. Should be around 14.8 or something, or close to my 15,000. So like I said, if your liquidation price, if your surplus is lower than your liquidation price, you can always cancel your take profit and stop loss and then readjust it, because there's no point putting a stop loss if it is lower than your liquidation price. I hope this explanation was fair enough. We'll continue tomorrow. This is basically like an intro, as I explained to you the basic features of a futures, the basic terminologies, which is the short, the long, liquidation, the leverage, and your risk management. So, any questions so far? Thank you. So, Femi, please can you unmute yourself and ask a question?
Let's get you some water and take you around the neighborhood. We'll
Okay, good morning. Hello. Are you with me?
Good morning. I can hear you. Yes, I'm with you.
Well, actually, I have plenty questions, but I was thinking maybe I should just wait till tomorrow before I ask them.
Okay.
Yeah.
All right.
But so
Okay,
far,
but you have a question now.
the little explanation you gave, I think I'm okay with that.
Okay.
I'm cool with that for now.
Okay. No problem then. We'll continue tomorrow then. I'll make the video available after a while. All right, so another question from us. Rowan, Collins, Paul, Victor,
Yeah,
Mosby. Please, who? Okay, Rowan. Your network is poor.
My questions available.
Sorry, Rowan, I didn't hear you.
Yeah, I said I have some questions to ask, but I would want to go over the video again, so I'll wait till tomorrow.
All right, so I'll make the video available in like an hour time. So
okay. Please, sorry, let me just quickly ask this question. I just thought of it now. Hello,
all
ma'am.
right.
Now,
Okay, I can hear you.
I thought when trading this future market, like is there like a time frame or a duration for a trade? You know, unlike a sports trade now, you can actually set your limit and everything, and it might take months before you hit a particular target and so on. So with this future trading, is there like a time frame?
Yeah, futures trade actually they're not usually very long term or even mid term. They're very, very short term, very, very, very short term. Like you can see your stop loss or your take profits can hit in hours or days, but usually doesn't exceed that, because you know how the market is very volatile, and futures leverages on that to either give you profit or liquidate you.
Okay. You know,
So
why I'm actually asking is, you know, like okay, presently now BTC is around 15.6, right? And there's already rumor that it should get to 18 and 20 and stuff. So I'm actually just wondering that is it possible? The reason why I'm asking about the time frame is it possible for someone to like long Bitcoin to that amount?
See, you but you have to pay attention to your liquidation price.
Okay.
Do you understand? If your liquidation price is far, if your liquidation price is far away from your take profit, you can.
Okay.
Do you understand?
Okay.
If not, you
Yeah.
take your profit in bits, like, because imagine logging a trade. Is that not from your background? It's not from your background.
Oh, but John, you can play again. Sorry.
Okay.
Is it okay now?
Yes. Now, your liquidation point is actually what matters here.
Okay.
That's actually the advantage of BitMEX a bit. I don't know if you ever heard of BitMEX.
Yes.
In BitMEX, there's a way to manipulate the exchange that you can increase your liquidation price to be very far away, that the chances of your liquidation price hitting will be almost impossible. Like, it's just
Okay.
like now, knowing that it's for Bitcoin to drop all the way to 9,000, it cannot take you unawares.
Yes,
You have to
exactly.
give a virtual dip from this point. Do you get?
Yeah. Yes.
Now, there's a way to manipulate BitMEX to be able to do that.
Okay.
To be able to do that to get you to, but on the normal, like setting your trade on the normal, you might not
Yeah.
get that very large margin between your
Okay.
profit and your liquidation. So if you're setting your futures trade, you look at your liquidation price. That's what matters.
Okay.
If it is close, it means that you have to monitor your trade and take your profit in bits. If
Okay.
it's very possible to set your trade at 18K, you can take your profit. But what about your liquidation price? Is it close? Is it far? And I think it's also dependent on your leverage too. Remember, higher leverage means higher risk.
Higher risk.
If you're
Yeah.
using lower leverage, it's easy for you to have a much lower take profit.
All right. Okay. I think I get it. Thank you very much.
Yeah. All right. So I think we are good for now. We're good for now. It's almost 2 hours. So one said he'll watch the video later. Collins, okay. All right. So you think you just joined us now? I'll make the video available much later, so you can watch and then drop your questions in the group. Remember, manage your risk and watch your trades. Okay, now, thank you for being a part of this class. You can drop your questions in the group, and subsequently, I'll keep us updated. All right. Have a beautiful day and a great weekend.
Thank you.
All right.